Welcome to the World Financial Symposium's Market Spotlight webcast series. Today's conference will start in a moment. The WFS is dedicated to educating technology leaders through webcasts like these and the Growth and Exit Strategies Conference Series held in London, New York, Silicon Valley, and other tech and financial centers around the world. The speakers and sponsors of these live events read like a who's who of industry leaders. To learn more about our live events for CEOs, owners, and investors, or to access our library of on-demand spotlight webcasts covering markets like IT security, health tech, gaming, and more, please visit WFS.com. And now, let's join today's Market Spotlight webcast.
Good morning, afternoon, or evening, wherever you are in the world. Welcome to HealthTech. I'm Matt Rung, Director of WFS. Thank you for joining us for this exclusive Market Spotlight on HealthTech driving successful patient outcomes. Now, I'd like to introduce our moderator today, Steve Jones from the Corum Group.
Hey, thanks, Matt. It's great to be here today. Thanks to you and the team at the World Financial Symposium for hosting us and being able to talk about this particular market sector, HealthTech IT. Today we'll be reviewing some of the M&A activity and the trends behind that momentum, really with an eye on how the industry is focusing on driving successful patient outcomes and the investment of technology to support that theme. Pretty excited to have Jeff Brown with me as well. Jeff's the Senior Vice President of M&A at Corum Group. He and I work together in our healthcare M&A practice. Here are just a few of the companies in healthcare that we've represented. These companies and a few others that we'll highlight today on the broadcast are bringing incredible technologies to the market, implementing them across the entire spectrum of the continuum of care. So let's get going. Here's our agenda that we've laid out for today's discussion. First, allow me to take a minute and talk about some of the high-level trends and drivers in the market. Then we'll turn it over to Stephanie Jensen of our market research team. She'll spend some time looking at recent M&A activity, who are the top acquirers in the space, and review the trends of valuations and comps that we're seeing in the market, as well as talk about a few of the high-profile mega deals that have occurred here recently. After Stephanie, Jeff Brown will host a panel discussion. We're excited to have some industry luminaries, both on the buy side and the sell side, who will talk about what buyers are interested in and how sellers can build successful companies to become attractive to them. So I want to begin by setting the stage with how the industry is driving towards successful patient outcomes as the key metric for managing the effectiveness of healthcare. New technologies certainly create new markets. But you can see here that there's not a silver bullet or a single technology sector that's going to drive the complete value across the entire spectrum of the continuum of care. But there are a few that are emerging. Certainly telehealth, mobile health, which is different. Electronic patient records always will be in the mix because of the critical data that resides there. Movements in IoT, where device-side wearables are capturing patient information, as well as other advanced technologies. All of these will be contributing critical patient information, history, patient profile, metrics of care, prescription services, pharmaceutical solutions, all comprised to build a profile of a patient. Even more important, though, is that information now gets exposed in a holistic way to new AI engines that are in the market that can then munge that data with machine learning tools and AI services that will be used by advanced research groups in pharmaceutical, genetics, and other sciences to identify remedies, cures, and be proactive in our medical care. Once those patterns are identified and we jump ahead of the curve to become more predictive and preventative in our treatment, allowing at the same time patients to participate in that conversation, we'll be very close to that enviable goal of patient-centered outcomes, successful patient-centered outcomes. It's a big vision, but it's happening as we speak. few trends that we're seeing in health tech M&A support that. We're seeing strategic deals driven by AI and blockchain, continued strength in electronic records. Again, as we said before, that's where the data is that will drive these AI solutions. And then certainly private equity investment is flowing to this area, which is also attracting aggressive pursuit into the healthcare market by some very non-traditional but large players like Walmart, the recent triumvirate of Amazon, JP Morgan, and Berkshire Hathaway are just a few who are jumping into the fray. And all of this is happening in a mobile world, which drives telehealth and mobile health into the spotlight. So with that as the background to our conversation today, let's now go to Stephanie in Market Research, who will then be followed by Jeff Brown, who will take us through the end of the broadcast. Stephanie, over to you.
Looking at M&A activity in the health tech sector, the big headline is a trend of a smaller number of exits, but higher exit values. Total disclosed exit values reached more than $25 billion in 2018, but deal volume tightened. After waves of investment, innovation, and consolidation following the implementation of new federal health care laws in the United States, the market has reached a point of maturity in which investors are less inclined to pay a premium for market share, preferring instead to focus on profitability. The key takeaway here is that we have reached a peak, and smaller players who have not yet found a partner should act soon to take advantage of the broader, favorable tech M&A environment. Here, looking at the top acquirers of health tech companies, we see that the leader with 12 deals is Constellation, adding firms across its sprawling structure of subsidiaries in markets ranging from healthcare to e-commerce, automotive, and real estate. Constellation's Chief Operating Officer, Mark Miller, seen here on the right, was actually just at the WFS conference in Seattle as Corum's guest speaker. CompuGroup Medical was second, snatching up data management platforms for patient experience, dentist offices, and pharmacies, among others. And IMS Health came in at number 3 with their specific targeting of software companies geared toward patient privacy, healthcare systems management, and regulatory compliance. Mega deals in health tech over the last 2 years have seen steady growth, including a strong push recently. Showing no signs of slowing, 6 of the 12 deals listed here occurred in 2018 alone. The rise of private equity interest in the health tech sector has included prominent names such as Veritas Capital and Platinum Equity all investing in this burgeoning market. Not only was the largest health tech deal made by private equity portfolio companies, but 4 out of the sector's top 10 biggest deals involved a buyout firm. Earlier, Steve described the growing importance of AI in health tech. There have already been more AI deals in the healthcare sector in 2019 year-to-date than in all of 2018. These include Kiwi Health's acquisition by India-based netmeds.com to strengthen their AI offerings, supporting patients and doctors. France-based Medicine Direct was acquired by Teladoc to bolster their AI-enabled online and mobile telemedicine consultation services. And Lightning Bolt, providing AI-enabled physician shift scheduling software, was acquired by communications system developer PerfectServe for the healthcare sector. EHR consolidation in recent years has changed the face of the market, as the remaining number of vendors has dropped by 60% in the past 10 years. Some of the consolidation we have seen in 2018 includes the acquisition of NetSmart by GI Partners and TA Associates, which also recently acquired Corum client Gurok Software. Other notable EHR deals included Veritas Capital and Evergreen Cost Capital's acquisition of Athena Health, the acquisition of Matrix Care by ResMed, AdvanceMD's acquisition by Global Payment, and finally Allscripts' purchase of Practice Fusion. Taking a closer look at some key transactions, and in particular looking a little more closely at Athena Health, taken private by PE Consortium, led Veritas Capital for $5.7 billion, a 12% premium over its public market valuation, and over 4 times its annual revenue. Veritas is combining the EHR giant with Verence Health, which it acquired from GE Healthcare earlier in the year for $1 billion. Amazon, who is on the same panel as Constellation at the Seattle WFS, is a new market entrant with its acquisition of PillPack, expanding its growing number of offerings into the online pharmacy space. Between deals like this and the Haven joint venture with Berkshire Hathaway and JP Morgan, Amazon is going to be a big player in the healthcare field. Elsewhere, in one of the highest valuation multiples in the sector, health data integration SaaS provider Ability was acquired by health analytics SaaS maker Inovalon for $1.2 billion and 8.6 times revenue. In virtual care, Advanced Medical was acquired by Teladoc for over $350 million and more than 5.5 times revenue, expanding their growing number of product offerings in global markets. Supporting patient engagement, HealthGrid was picked up by Allscripts for $60 million, adding mobile-based, patient-facing technology to its primarily back-office product line. And finally, in the analytics arena, SCIO Health Analytics was acquired by EXL Service Holdings for $240 million, adding payment integrity and population risk analytics technology to support their existing capabilities to deliver more complex clinical work.
Stephanie, thank you. I'd like to turn now to our panel of industry luminaries to dig a bit deeper into the market opportunity. We have as our guests today Dr. Maryann Choi, founder and CEO of Collain Healthcare, Eric Keene, general partner at Council Capital, and Curtis Gattis, founder and CEO of Leading Reach. I'd like to turn first to Dr. Maryann Choi, clinician, operator, and entrepreneur. She is most recently founder and CEO of Collain Healthcare, and I was fortunate enough to work with Dr. Choi on her recent transaction. Dr. Choi, you've essentially defined value-based care by breaking it into 4 key elements. Could you please share with us what those elements are? I believe you refer to them as the 4 C's.
There are 4 areas that I call Dr. Choi's 4 C's. I would like to talk about them one by one briefly. The first is consumer engagement empowerment, which is patient-centered care. The second is connected care. The third, continuum of care, which means coordinating care across the care continuum. And the last is a care coordination focused on root cause intervention. This is a team care approach to provide care in a holistic way.
How do you view the healthcare system evolving as it moves towards value-based care?
I think it will be a data-driven business transformation. We need to track the value-based outcomes and better patient engagement tools.
How do you see the importance of interoperability?
Population health is to improve the health outcome of each member of the population and apply to the larger group. We need data transparency, integration platform, and analytics, so interoperability is key to accomplish those.
Dr. Choi, thank you. Very insightful. It's now my pleasure to introduce Eric Keene, Managing Director of Council Capital. Council Capital is a private equity firm that invests solely in health tech companies. Council is comprised of 34 CEOs, each with extensive healthcare and company building experience, which gives Council a particularly thoughtful perspective on the industry. Eric, we've discussed this shift to value-based care and patient outcomes. How does this affect where you invest or where you see opportunities in the healthcare technology arena?
The biggest challenge we see in investing in healthcare today is that we still live in a world where a huge proportion of payment in the delivery system is predicated on a fee-for-service model. This is changing, but not as quickly as most people would want. So we think of our investments across a continuum where companies succeed in the current fee-for-service world, but that they're well-positioned as the world moves to value-based care. As a result, many purely value-based providers in the technology value-based providers and technology business are still too early in the adoption cycle for us. We do like tools and technologies that enable providers to move to value-based care. We're also very interested in niche EMR and EHR plays with a steady customer base.
Are there particular markets that come to mind or catch your attention?
We spend a lot of time investing in businesses providing care to high-cost and vulnerable populations, which often have a heavy behavioral element to them. These behavioral health populations have historically been managed in silos, and we've continued to evaluate opportunities that integrate medical and behavioral health on the provider side or on the technology-enabled care management side.
Do you see any movement with technology addressing the healthcare worker?
I'm a huge believer in workforce management solutions. Some of the biggest companies will be created in that market. And given the makeup of today's and the increased pace of change transitioning the workforce due to automation, there's an incredible opportunity to redeploy displaced workers into long-term care positions, particularly long-term care positions providing care to people in their homes.
And what about the challenge of integrating technologies or the theme of interoperability?
Great question, Jeff. It's a topic on everyone's mind. I think it's a challenge because no one is incented or really wants to share data in today's marketplace. The need for interoperability only continues to go up as the consumer continues to have more power and influence broadly. I don't think the government is going to step in and demand it. I think this transition will ultimately come when the consumer demands it. Healthcare consumers continue to shoulder an increasing proportion of their healthcare costs with the increasing adoption of HRAs and HSAs in the United States, which now represent about 30% of employer plans. And as that burden continues to increase on the patients, they're going to demand transparency into pricing. And this transition into demanding transparency will ultimately lead to demand for information to make informed buying decisions. I think the consumer will ultimately demand the interoperability of systems such that they can maintain their personal health record on their phone and then provide that to any provider health system when they enter the system for a care episode.
Eric, thank you for your investment perspective. That was insightful and informative. Now I'd like to introduce Curtis Gattis, CEO of Leading Reach. Curtis, to quote a colleague of mine, where you stand on anything depends on where you sit. So briefly, can you tell us what your role is within the continuum of care model? What do you guys do, and what is the connected referral management?
I'd like to think that we sit right smack dab in the middle of communication, care coordination, and healthcare. Ultimately, what we believe is broken in healthcare is communication. You can point to a lot of different things, different EMR systems that are siloed, the dependence on the fax machine, who knows how many patient portals a patient is given to manage. But at the end of the day, what we believe is broken is communication, be that provider to patient throughout the entire life cycle of their experience, or in the scenario where they need to transition that patient to another entity in order for them to continue that care. And ultimately, because of the environment that we're in with over 1,000 different EMR systems out there, none of them effectively talking to each other, and therefore we're dependent back on that 1843-based technology called the fax machine. And that's what we've really endeavored to do, is go and connect the entire country on a single platform, much like LinkedIn has done for business professionals, where anybody can hop on the network and communicate and coordinate care more effectively with 100% accountability between the two entities involved.
With so many systems and stakeholders to communicate with, could you give us a concrete example that highlights your approach to bringing direct benefit to the patient?
A lot of times what gets lost in all of this is the patient, and at the end of the day, that's what we're really all about, providing a backdrop for patient safety and patient care. Let's take a couple of different examples. One, we see a lot of times referrals that have a lower completion rate. So if I say, hey, Jeff, I'm going to need to send you over to an oncologist, that's probably going to be a shock to your system. And because it's so serious, you're going to be a lot more inclined to go and see that provider. But in another scenario, I may say, hey, Jeff, I need to send you over to a rheumatologist, or maybe I need to send you to get an imaging study done, or maybe to see an orthopedic. There's a lot more patient discretion in those scenarios, and many times they're actually just as critical as an oncology referral. So by putting this foundation in place where we have both sides engaged as well as digital communication to the patient, then we have more than one person really looking out for the patient care and for the sake of that referral. And now we have a pull mechanism that's much more effective than just the simple push mechanism. And hey, Jeff, I'm going to fax something over there, and you're going to walk out of here with a business card with the contact information for that rheumatologist. And in this scenario, I actually flag that patient as high risk. attach a health plan and a priority to him. And then that rheumatologist on the other end is going to have a lot more insight and an ability to bring you in as a patient and ensure that we're actually getting you there. And obviously, that's in the best interest of the patient as well as those around them. This is even more important as we transition into value-based care, and that's a really good sign because sometimes there are a lot of unnecessary referrals that are out there and in increasing the cost and burden on our health system. We've really brought this notion of patient pipeline management to the specialists, and for them, giving them a referral to appointment ratio allows them to understand and manage their business. And that's allowing them to highlight operational efficiencies and opportunities when many times they have very little visibility into what their team is actually doing to schedule these patients. It really drives two main benefits to the value of care continuum. One, it provides that specialist a mechanism to make up some of this lost revenue and ensure that he's capturing every patient as effectively as possible. And two, it dramatically improves the patient's chance of scheduling in a timely manner.
Curtis, thanks. That was great. Thank you very much. And I want to extend another thanks to Dr. Choi and Eric for their expert insights. It's been great to draw from everyone's unique vantage points for today's discussion. Dr. Choi is a clinician turned operator and entrepreneur. Eric is a leading private equity investor. And Curtis is an entrepreneur building a fast-growing health tech company. So let me see if I can distill today into a few key nuggets. First, value-based care refers to an outcome-based payment model that is replacing the traditional fee-for-service model. Two, Dr. Choi's 4 C's are first principles in value-based care, where the patient is the consumer, treated as a whole person. The 4 C's are consumer-centered care, connected care, a continuum of care, and coordinated care focused on root cause intervention. From Eric Keene, the shift from fee-for-service to value and outcome-based payment model is a challenging one. Many entrenched stakeholders exist, and there are attractive investment opportunities in the transition zone. And then from Curtis Gattis, effective, connected care depends heavily upon communication and care coordination between the silos of care providers to more tightly integrate clinical workflows.
Steve, Jeff, thank you for an excellent report. It looks like we have a few questions from our audience on the Q&A board. This one is for Dr. Choi. Does value-based care have an impact in the less vulnerable populations?
Well, sure. Commercial insurance providers are a good example in providing population health management across all population segments.
This one is for Eric. If my company's business model is 100% SaaS revenue, how does it affect my valuation?
Buyers will almost always have a strong preference for SaaS models, as it is easier to predict and understand the sustainability of the revenue stream, whereas a license model always leaves the buyer wondering how many more licenses they can sell, given the fact that each sale is one time and not repeatable. So in some ways, you have to look at license sales akin to selling franchises and receiving a one-time payment. Buyers really want to understand and scale the maintenance service component in a license model, which is the entire revenue base in a SaaS model. Buyers will almost always want to develop a strategy to convert a license model to a SaaS model. So anytime a buyer hears the words convert, change, reconfigure, pivot, it introduces an element of risk. Increased risk means valuation is going to be lower than if it's a pure SaaS business. Doesn't mean that it's not valuable. It just means it will be less valuable than a pure SaaS model.
This one is for Curtis. Are there any sectors or domains that are adopting this cross-provider solution at a faster rate?
So the lowest hanging fruit from our perspective is that value-based care organization that is starting to look at risk-based contracts and those entities that have the desire and motivation to ensure that their patients are being seen.
Excellent. Thank you to Steve, Jeff, and all our other guests for their fantastic insights. We're out of time here, and we have more questions coming in, so we will follow up with you. A quick note about our upcoming events. Our next Growth and Exit Strategies conferences will be in New York on June 18th, Singapore on August 2nd, and San Francisco on September 17th. We've got some fantastic speakers coming to these. Check out WFS.com for details and registration. Now, let's go to our close.
We hope you enjoyed today's online symposium. If you have any questions not answered, please submit them to info@wfs.com. We look forward to seeing you at one of our upcoming live events in a city near you. To register for these live events, view upcoming webcast topics, or hear rebroadcasts of this or other Market Spotlight events, please go to wfs.com. Thank you for attending today's webcast.